Hello and welcome to CMC Markets Trading Outlook for the week of February the 8th, 2016. My name is Colin Sazinski, Chief Market Strategist. This week I'm going to look at two things in particular. First of all, the huge turnaround we saw in the US dollar and what this week's testimony from Fed Chair Yellen could mean for trading in currencies. And secondly, on the stock side, I'm going to focus on earnings. There's still a lot of big name earnings reports coming out this week, and I'm going to look particularly at the technology and entertainment sectors. So I'm going to wrap with a quick finish on the week that was, which was we've had the big news was this huge turnaround we've seen in the US dollar index, and I've brought it up here to show what's happened. We had a big rally in it over the last year or so, from late 2014 to late 2015, where it had a huge run, and then it got up about 100 here in November, and it couldn't get through, it couldn't stay above. Look at that huge engulfing pattern candle, knocked it down here early December, and since then it hasn't been able to get back through 100. Why was this important? Because we had every reason for the US dollar to keep going up. The Fed raised interest rates. ECB came out with stimulus. Later on, Bank of Japan came out with more stimulus. The Bank of England went more dovish. Every reason in the world for the US dollar to blast through 100, and it couldn't do it. This was a sign that we've had a big top forming here in the US dollar, and then last week, kaboom, the bottom finally gave way. There's a big trend support broke, and now it's starting to work its way down. We've had a 4-day sell-off here. Now we are getting an inside day here on Friday. I think this is a little bit of short covering, a profit taking ahead of the weekend. And because when we look to the employment report, it was okay. It wasn't that great. But here's the thing is what's happened and why we got this was that at the beginning of this year, the Fed party line was 4 interest rate hikes this year, every other meeting, next one in March, off we go. But over the course of this last week or so, we've seen a change and really a split into 3 factions at the Fed. So we had some of the key ones, Fisher and Dudley and also Brainerd have gone a little more dovish and have started to say, well, we're seeing this volatility out there in the markets. We're seeing a lot of volatility and concerns of what's going on overseas. How could this impact the U.S. economy? And maybe we won't raise interest rates quite as fast as we thought. Then there's a neutral group that's kind of saying, led by Dallas Fed President Kaplan. He's not a voter, but kind of we're going to wait and see what happens. All our options are still open at this point. And the third faction are those who remain hawkish. That was Cleveland Fed President Mester and Kansas City Fed President George, who have said, well, look, there's always volatility when we transition monetary policy. There's always volatility when the Fed starts raising interest rates, and this is not unusual. It's not unexpected. We'll work through it, and we think that the Fed should just stay on course and keep raising rates because the underlying economy is strong. So today we got, here on the Friday, the 5th, we got U.S. employment. It did come in soft, no question about it, and we had a negative revision of 30,000 to the previous month. So the U.S. job economy market, not quite as strong as people were thinking, but at the same time, though, the unemployment rate went below 5%. So the Fed's hitting on all cylinders on their employment mandate, even if January growth slowed a little bit. And but of course, things are still weaker on inflation, and a lot of that's from falling energy prices. So this week, the big development is Fed Chair Yellen. She speaks to Congress on Wednesday. Clearly, as the chair, and she's going to. What she says will be taken by the street as to which way things are going. But what we're seeing here with the U.S. dollar starting to roll over, we'd already seen the bonds price in no U.S. rate hikes in 2016. Meanwhile, the dollar was still saying 4. So we're probably going to end up having to come back into the middle somewhere. And my suspicion is I had called for 3, of which I said they'd miss September, and December was a coin toss. So we could still go 2 March and June, and then maybe they stop, or maybe they delay a little bit and do 1 in June or 1 in December, or something like that. The point is that the U.S. dollar has priced in a much more aggressive rate hike campaign than we're going to get, and that is a trend that even if we do get bounces here and there, that's a trend that's unfolding and is likely to continue and be a big story in the coming months. And the other thing I'll note here is that because we've seen this move happen so fast, some moves started to get overextended here, almost pretty much oversold on the RSI, but also other markets that could be active around Yellen speaking and in general through the week. Let's take a look at gold here. is another one. Look at this. Gold has come screaming out of a base here. Nice double bottom. It's broken out of this couple handle, gone rallying here. It's up around the Fibonacci level 1155, but look, it's getting overbought on the RSI, and it's the most overbought it's been in a year. So because of that, I'm not thinking that we'll have another big sell-off like this, but we could get a correction in gold, or it may need to trend sideways for a while to digest the move it's already had. So keep an eye on that. Gold may be getting a little overextended now, and if we come up and we look at euro dollar, we'll see the same sort of thing. Look, we had this big breakout here. This was on the ECB back in December, their meeting, when they didn't go as stimulative as people thought. Nice consolidation here. Look at this great support and accumulation, and then breaking out from this channel, and kaboom, up we go again. Now look, we're starting to level off at a higher level. Maybe we get a repeat of one of these. We did get a touch overbought on the RSI. Now it's time for it to start digesting as well. A couple of other currencies I'll just show while I'm talking about them here. Let's take a look at sterling. The UK has gone more dovish. And we're seeing that here, that it has kind of lagged behind some of the others. It did have a good update here when the US dollar collapsed, but then look, we're kind of just filling in and going sideways here. The UK, the Bank of England, they cut their CPI, they cut their GDP forecasts. They're not expecting to raise rates this year. But what's also important is that Governor Carney also went out of his way to say that they're not thinking about cutting rates either. There had been rumors of that going around. What I think's happening is that Carney wants to stay out of the Brexit debate. He doesn't want interest rates to move very much. I don't think he wants the sterling to be moving very much either upward or downward. So I think he's trying as much as possible to just kind of keep things on hold through to June and the big vote. The last one here I'd like to highlight for today, two more, dollar yen and dollar CAD. So let's do dollar yen here. And look at this. Dollar yen now has a big support test underway. Look at this big plunge here. 1, 2, 3 days down as the US dollar came crashing down, and it also has stabilized here. But if it starts taking out this 116.15, its August low, then look out below, because this could be a big head and shoulders top forming here. Shoulder here, and a big triple top head, almost a quadruple top head up through here. So that means that, and if I take this out longer, we'll see that, okay, we'll see here, we've got this kind of a top forming. We had a double top back here. If this lets go, then there could be some pretty significant downside, perhaps back to 110 for dollar yen. So keep an eye on that. And that's despite Kuroda still talking dovish out of the Bank of Japan. Let's do dollar CAD as well. Dollar CAD had been really overextended, as we know, and this still almost looks like a vomiting camel pattern to me. One hump, two humps, and down we go. And but look at this, really overextended here. Now we're starting to see the snapback the other way. The Bank of Canada didn't cut rates again. Oil is on the rebound, and the US dollar is starting to roll over. The three things that conspired to drive the loonie lower and dollar CAD higher are now flipping back over the other way, and we're seeing it start to trend back down. Now, we've already done a 50% retracement of this move up here from October, so no surprise, we're seeing it level off a bit. But look, here's the 50-day moving average broken, now becoming support. That's around 139.14. Look at this now. We've got it has gone under 50, retested, and still trending lower. So this downtrend is still intact. Even if we do get a correction up in here into the 140 area and this Fibonacci cluster, overall though we're still below this trend here, lower highs. That's 141. So we could still work our way down over the longer term here. It does look as though CAD has turned a corner. So even if we do get some short-term corrections in currencies where things got overextended because the snapback move was so big, still there's a pretty serious trend change underway, and that's pretty clear. So when we get to, and I'm just going to quickly mention the US dollar index here. Look at this. We had seen a sell-off here. And take a look now. We are starting to carve out a nice rounded base here as well. Still getting higher lows here. We're just at this 50. We need to see that punch up through to signal here 16,475 for the Dow. Where they can punch up through there and through there. The problem is this, is that we're running into now, is as we did back in the summer and in September with the Fed meeting, this little sell-off here. is that people are no longer taking bad news as good news. So this shortfall we had in U.S. employment was seen as could be seen as good news for liquidity. It's less likely the Fed's going to raise rates. However, the Fed was raising rates because the U.S. economy was strong. If it's not raising rates anymore, the U.S. economy is not so strong. That means the outlook for corporate earnings isn't so good, and we've seen stocks actually start to pull back a little bit here on that realization. So we would be looking for potentially from Fed Chair Yellen's speech, something balanced could kind of keep the recovery going, something very dovish could actually send stocks lower, and something hawkish could actually send stocks higher because it would be talking about confidence in the actual economy. And now that I'm going from here, I want to segue onto my next topic by looking at the Nasdaq 100. While the U.S. Dow is down a little bit, the Nasdaq is breaking down quite a bit today. And the reason for this is that we're seeing a number of sell-offs in technology companies to finish the week. In particular, we'll look at LinkedIn, which has really gotten crushed here today. So let me start there. As soon as I find, there we are. So let's start with LinkedIn. Kaboom. We've talked about this before, and it's something we've seen. Strong earnings, poor guidance, stocks down. And so we'd seen that from Apple, and we've seen that from other companies, and Amazon to a certain extent, and a lot of other names across a wide variety of sectors this earnings season. But look at this one. This is the biggest one we've seen yet. They beat the street big time on earnings, but they came in a little bit short on sales, and kaboom. Look at this. This is just the bottom was ready. This looked like it was ready to put in a double bottom. Then the bottom just fell out and down it went. Eventually, you'll probably see this gap start to get filled back in. That's a move down there from about 185 down to about 130 and then on to about 110. So it still shows out there in tech land. Companies that are missing are still being punished. Even though expectations have come back off, there's still room to come down further. And I'm going to highlight that also in the entertainment sector, which also has a big week coming up for earnings. And let's look at Lionsgate here. So LinkedIn went down 40%, Lionsgate down 30%, and unlike back here in August when it fell and turned right around, this time it's gone down and staying down. And look at this, we had the shares actually peaked in a double top early November, trending lower since. Even though they've trended lower, even though people have known for a while that, gee, the Hunger Games didn't do quite as well as people thought at the box office, still, look at this, kaboom. 30% drop. Why? Well, they confirmed that the Hunger Games movie did not do quite as well as its predecessor. That meant their earnings were likely to come in 100 million short of what they were expecting. And adding to that is people have already been kind of worried of, well, what is Lionsgate going to do for an encore now that the Hunger Games series is finished? And this had a lot of people pulling the ripcord and heading for the exits on this particular news. So why are we focused on these ones that have passed? Because the ones that are coming up, and we're going to start with a big one is Disney. Disney reports Tuesday night after the close, and it's gotten down to a pretty key turning point here. This massive sell-off back in August was on disappointing results out of their ESPN, their cable stations. And why? People are cutting loose from cable and going to things like Netflix and so on. So, look at this big collapse in the share price, but it had found support around 90. Big recovery on anticipation of Star Wars. The usual buy on rumors, sell on news. Shares have been coming back down since late November, but certainly since the Force Awakens came out. Even though it's having a massive run at the box office, already been priced in. People are looking past it. People are looking to 2016 and saying, okay, well, you don't have an Avengers movie, you don't have a mainline Star Wars movie. You do have this side Star Wars movie called Rogue One, but it doesn't have the main characters in it. We don't know how it's going to do, and so we're seeing the shares languishing back here. So again, like with Lionsgate, we're back at a retest now. We're retesting 90. We've got a nice little hammer candle here. That's good news in the doji, and it looks like it wants to stabilize. RSI looks like it wants to stabilize, but you can't rule out that if you get any kind of a miss on guidance, kaboom, you could see this thing come back and retest maybe 80. Right, this low back here in late 2014. Right, if you do get some good news, then the stock could come back up and take a run at 100 or 102 here fairly easily as well. So Disney has the potential to have a lot of volatility around its earnings report this week. The next one I wanted to mention is Twitter. Here is another one that is at a key point around its earnings report. Shares been under distribution for a year. Some of the key middle managers recently left the company. That's never a good sign. There's been all kinds of rumors around that subscriber growth has been disappointing again. And interestingly, there's the odd day where we get takeover rumors, and then they get quashed pretty fast, which we've got more today, and then the stock's not really responding very much. And I think we've had so many takeover rumors around Twitter that it's an issue of, well, either these people have kicked the tires and walked away, or they weren't really there in the first place, and there is people just hoping and dreaming, and so it's hard to tell. But around earnings reports are often a time when you do see takeover announcements, so you can't totally rule out that somebody could take a run at Twitter and this thing could pop. On the other hand, it's at an inflection point where Facebook stumbled out of the gate, but it managed to turn things around, and it's been a big winner. On the other hand, we've seen that LinkedIn get crushed, so people aren't that happy with social media companies that are struggling. And on top of that, if they continue to disappoint, then maybe it continues its long slide to irrelevancy in the market, like we saw with Groupon, that had this big flashy IPO and then just kind of kept on going down from there. And Twitter is looks like it may be falling into the same boat. So we have to keep an eye on that. The Super Bowl's this weekend. We'll see if that generates any traffic on Twitter that the management wants to talk about as well. So potential. This thing is another one here. Even though it's already come down, it could go either way. It could pop back up on good news or on a takeover. It could keep sliding on any kind of weak news or sign of no takeover. So Twitter is a big one. And the last one I wanted to highlight here today is, actually there's two more. First of all, I'll bring up Time Warner, talking a little bit more about the entertainment sector. Now, Time Warner hasn't had quite as many of the big the franchises last year. However, they do have a big one coming up. They have the Superman versus Batman movie coming in March. So far, the shares don't seem to be reflecting much anticipation of that. And people may not really know what to make of it, but we'll see what happens here. They do have that coming out, and likewise with Disney, people are going to be wondering what's going on with cable networks, what's happening to subscription revenues, and so on. It was another stock here that tumbled back in August. Same sort of thing. And even if you do have movies that are doing really well at the box office, is it enough, a one-time big hit on a film, to offset this ongoing loss of day-to-day and week-to-week and month-to-month revenues that the cable side generates? So it's you may lose your bread and butter, but you still have the sizzle. And how does the street respond to that? So not only Disney, but we could also see that play out in Time Warner. And the last stock I wanted to mention here was Tesla Motors, which is also, again, we're seeing another one where we're seeing expectations come down quite a bit. Unlike a number of stocks in the market that have actually been stabilizing and bouncing back, and certainly in resource areas, but Tesla is just continuing to plunge here. It's been under heavy pressure here. A lot of people still coming out. It is getting oversold on the RSI, though, so expectations are lower. If they miss, could it go lower? Maybe. Could it turn around and bounce if they're not as bad as people are fearing? That's a possibility, too. So another name that when it reports earnings could see a lot of volatility. So we have Disney reporting Tuesday night, Time Warner is Wednesday morning, Tesla and Twitter are Wednesday night. So that 24-hour period there between Tuesday and Wednesday, and actually, interestingly enough, Wednesday morning is also when Fed Chair Yellen is talking. So the middle of the week this week has the potential to be really active, not only for currencies but also for stocks.